Hello, everybody. Professor Hassey here. This is a short review video of quiz number 3. Since we did not have class on Wednesday, May 12th, today is Thursday, May 13th, and I'm posting this review for you. Again, a lot of these questions or similar questions will be on our final or examination number 3 in a couple of weeks. So I wanted to go over these with you in this video, and then that'll save us some class time next week to talk about new material. Our quiz was on the subject of the most recent chapters in dealing with investments. And I was looking for some definitions and some calculations and some interpretations of that work. The first question was what is the difference between common stock and preferred stock? The main thing is that no dividends for common stock, but preferred stock have dividends. In other words, when you buy a preferred stock for the dividend, common stock has the option of paying you a dividend, but it's not guaranteed. Preferred stock has dividends. That's a little bit misleading in that definition there, but that's what that represents. No, dividends for preferred stock, maybe dividends for common stock. And also the next big one is preferred stockholders have no vote in the company's governance. They have no vote, cannot attend, well, they can attend the shareholders meetings, but they do not have a voice in the company. What are 3 calculations indicators that evaluate the profitability of a corporation? And those answers are a variety of different ones, but they all highlight about financial statement analysis, earnings per share, price earnings ratio, dividend yield, total return, capital gain, return on assets, return on equity. But notice there's nothing too much about profit margin or gross profit. Those are all part of the earnings per share and the price earnings ratio and the capital gain and all that sort of thing. Remember, you're talking in terms of an investor, not somebody who's looking at the financial statements for data, but as an investor. What are the characteristics or 2 characteristics of a bond? Basically 2 things. They both have a maturing date, a maturity when the principal is due, and there is interest payments designated as coupons involved with a bond. I think the true false questions, everybody did, I think everybody got those right. Nobody got them wrong. Everybody got question 5 correctly, and the 2 multiple choice questions. Also, everybody did very good on the Roth. That's good to see that a lot of our students are investors and aware of the tax implications of the Roth and the regular IRA investments. This is one where some of us had some problems. I wanted you to find a mutual fund. There's thousands of them out there, but it was not a particular stock, but a mutual fund where they have a variety of stocks in those funds. For example, I picked Vanguard. It's a stock mutual fund. It is an investment strategy of S&P 500 index. In other words, they purchase stocks in the S&P 500, and there's their current price and their current yield. So this is what I was looking for, not a particular stock, but a mutual fund where you can go in and buy a group of stocks in one. Total return on the mutual fund of this, if you purchase it at $23, you're paying $4,600 for 200 shares. You sell it you get a dividend of 92 cents a share, and you sell it as recording a capital gain of 80 cents a share. So that's a total return of $61.44, $1,544 return on the investment. Capital gains is principal being increased or share price increasing. Dividends is the dividends paid on the stocks in that mutual fund. Everybody did pretty good on this one. If a company has a after-tax earnings of $9.7 million and 7 million shares of stock outstanding, the stock is currently selling at $32 a share. Their earnings per share is the net income or after-tax earnings divided by the shares of stock outstanding. That's $1.39. The price earnings ratio is the relationship of the stock price, $32, to the earnings per share of $1.39. Thus, you get roughly around a 23 price earnings ratio. The stock price is 23 times greater than the earnings per share. And that indicates a whether the stock in the market's terms is over or undervalued. This is about average. Could be right in between being overvalued and undervalued. So that's our quiz work this week, just going over the definitions of stocks and investments and mutual funds, and what are returns, what's the difference, what's a bond, what's the difference in various stocks, and the difference between stocks and mutual funds. So this all work will be on part of our examination number 3. And one last thing I'd like you all to, if you are watching this video, is make sure your grade situation, you understand what your grade average is now coming into the final 2 weeks of the course. If you have any questions or concerns about that, please let me know. Thanks, everybody. Have a great day, and we'll talk to you next week. Bye-bye.